Salt Lake City's real estate market is going through some massive changes. And if you're thinking about buying, selling, or investing in 2025, there are 7 major trends you absolutely need to understand. And trend number 3, almost no one is talking about it, but it could completely reshape the market this year. Before you make any big real estate decisions, you need to know what's happening and how to position yourself for success. And if you're serious about making a move, reach out to me today. I'll help you navigate this shifting market and make the right move at the right time. My contact info is below. Shoot me a text or email or give me a call and I'll give you my exact home buying plan for today's market. Now let's dive into what's happening. First, let's talk about the market balance and where we're heading in 2025. Salt Lake City and the surrounding suburbs are slightly in a seller's market with around 3.5 to 4 months of inventory, but things are more balanced than they've really ever been in years. A true balanced market has around 6 months of inventory, and while we're not quite there, buyers finally have more options. However, demand is still strong in key areas, meaning competition hasn't completely disappeared. The median home price in Salt Lake County right now is sitting around $620,000, with most homes available between that $500,000 to $700,000 price range. Now, if you're looking for a single family home under $400,000, it's nearly impossible to find. And at the $900,000 plus price point, inventory is limited as well. The highest demand areas right now are places like Saratoga Springs and Lehigh in Utah County, along with Harriman, Riverton, and South Jordan in Salt Lake County. Daybreak in particular in South Jordan continues to be one of the most attractive markets with thousands of homes planned over the next decade. Homes with unmatched views like those in the Avenues neighborhood or the St. Mary's neighborhood near the zoo and Olympus Cove in Mill Creek remain in high demand because there's really no more land left to develop in those areas. Next, let's cover where buyers can still find deals despite the competition. There are still some opportunities to buy at a great value if you know where to look. For instance, Midvale has a ton of new construction townhomes that offer solid value, while places like Harriman, which is still in a developing area, buyers can get in before prices climb further. In Saratoga Springs and Eagle Mountain, builders are aggressively offering huge incentives, many covering closing costs or even buying down your interest rate to make your home more affordable. The truth about Salt Lake City's rental market. Right now, rents have actually dipped slightly. The average rent in Salt Lake City is around $1,500, which is actually 3% lower than it was last year. Right now, there are about 685 rental units available, meaning renters have more choices than ever before. But here's what's really happening. Many buyers are holding off on purchasing because they're waiting for rates to drop below 6%. That is keeping rental demand high, even though prices have softened. And because of that, the rental market is still very strong, especially in key areas like downtown Salt Lake and Sugar House and newer suburban developments with high-end amenities. And guess what will happen as soon as interest rates drop? All of those renters will flood the market, causing prices to soar even higher. And it's not just locals trying to get into the Utah housing market. Now this brings me to point number 4. Who else is moving to Salt Lake City? Let's talk about the migration trend that's fueling demand. People keep moving to Utah, and this is some of the biggest factors affecting the market. The top states people are moving from include California, Washington, Idaho, Texas, and Arizona. Now, California alone has sent over 18,000 people to Utah last year, and that's created a huge demand for housing. Now, there's a big stigma that California buyers are outbidding all the locals with cash offers, but here's the reality. That's mostly happening in the luxury market. For most homes in that $500,000 to $700,000 range, competition is still coming from local Utah buyers who are really just trying to navigate affordability. The next thing to consider is new construction is booming and builders are offering huge incentives. Salt Lake County and northern Utah County are seeing a huge surge in new development. Lehigh, Saratoga Springs, and Eagle Mountain have the most new construction, but there are also a major project in places like Holiday Hills near the old Cottonwood Mall, and Daybreak alone is adding 10,000 new homes over the next 10 years. The biggest advantage for buyers right now, builders are offering up to 6% in seller concessions, which can go towards closing costs or a temporary rate buy down to lower your mortgage payment. A lot of buyers are using what's called a 2-1 buy down, which means they're starting with a lower interest rate and then refinance later when rates drop. This is a smart move because it allows buyers to lock in at a home price in today's prices before demand pushes them even higher. Now, the sixth thing to consider, how interest rates are impacting buyer behavior from a psychological standpoint. One of the biggest things holding buyers back is high interest rates. Right now, a lot of buyers are waiting for rates to drop below that 6% range, but those who are acting now are actually getting in with better prices and with more negotiating power. Now, here's a strategy. Buy now at a lower price, then refinance later when rates drop. When rates do fall, we're going to see, I think, some more competition and higher home prices. So waiting could actually cost you more in the long run. Now, it's very dependent upon your situation. So if you have questions about that, feel free to reach out to me. The last thing to consider is Salt Lake City's economy is booming and bringing in high income buyers. Salt Lake City is attracting high income buyers thanks to major growth in the tech, finance, and healthcare industries. For instance, Fidelity Investments recently announced 300 new tech jobs. Brador is investing $277 million into Utah, and Goldman Sachs is expanding its Salt Lake operations, encouraging more employees to relocate. The University of Utah is also building an 800,000 square foot medical campus, which is bringing in hundreds of new healthcare professionals. On top of that, Utah's outdoor recreation industry is seeing record growth, attracting people who want an active lifestyle while working in a lower tax, business-friendly state like Utah. This is why demand for homes is still strong, even as the market stabilizes. Now, here's my final thoughts and what it means for you. Salt Lake City's real estate market is evolving, and understanding these 7 major trends is key to understanding the right move for you. Now, whether you're buying, selling, or investing, now is the time to actually have a strategy in place. So if you're thinking about making a move, let's talk. Reach out to me today. I'll help you navigate the market, find the right home, or sell for top dollar in 2025. And if you want to stay ahead of the market, make sure to subscribe to the YouTube channel for weekly updates on the best areas, new construction, and really smart real estate strategies that will help you win in this market.